Hello, everyone, and welcome to the Tesla Economist. I would really appreciate you hitting the thumbs up and don't forget to subscribe. So whether you've been investing in Tesla for some time, are new to it, or thinking about getting started, I'm going to give you all my experience with the stock. To give you some credibility, I've hit over 1,000% returns in just a few months, several times with Tesla, and I'll tell you how in another video, so stay tuned. This video is here to help you find the best strategy for you to invest in Tesla. It's not a video explaining why to invest in Tesla. At this stage, I would hope you already have enough reasons to invest. So how do you get in initially? It can be very daunting at times, especially when it reaches new highs and you suffer from FOMO, fear of missing out, and it can make you act irrational. But everyone hates the feeling of missing out. Hopefully by this stage, you've been following the stock a bit and reading all the Tesla news. So let's explore some scenarios. As every investor is not in the same situation, I'm going to break it up into two types of investors. I will call one the capital investor and the other the income investor. The capital investor has a reasonable amount in savings ready to put in the market. It might be perhaps one whole year's salary saved. It feels like a lot of money to put in the market and can be intimidating, pushing a button that suddenly spends $50,000. I'll offer a few options of what you can do and let you know how they can pan out. Ultimately, at the end of the day, it's your money, and you should always do what you want with it. I'm just providing some options on how to get started. Let's keep with the $50,000 as an example. So obviously your concern is you'll put your money in and it immediately drops, and you lose $10,000 just like that. Even if you're planning on holding for decades, this still doesn't feel nice, although it's something you have to learn as an investor. But we can mitigate this scenario. Rather than put the entire sum in at once, you can just put half of it in, or a proportion you feel comfortable with, just to test the waters. Then, if it goes down, you need to try and be positive about it. That's right, train yourself to be happy when the stock price goes down, as it now means you can get more stock at a cheaper price with the rest of your available funds. This spreads your risk of loss. The downside is it also reduces your chance of bigger success. As buying in half, you're essentially gambling that the stock will go down with the rest of the money to invest. In other words, if the stock price rises and never comes back down, you miss out on putting that extra money in. On the other hand, the money you have put in did go up, so you never know, it could always come back down again. This was how I first invested in Tesla. As for the income investor, they don't have a large amount to invest, but they save some of their income every month and want to use it to invest. Let's say you're able to save $2,000 a month. Now, with stocks, some months the price is down, some months the price is up. If you're buying up every month, then you end up averaging out over the year, buying lows and highs. As you follow the stock continually, you'll eventually get to know when the stock is particularly low and when it feels like a bargain one month. Rather than putting in $2,000, you might consider putting $5,000 or $10,000 in, depending on how good a discount it is. But you'll need to have those additional funds available. So find a way, whether it's an overdraft from the bank or from family, you need to have it ready. Then simply use your next few months' savings to pay off the loan and pause your investing in the meantime. Over time, the stock will keep rising, and so will the number of shares in your portfolio. There may eventually come a point where you have the equivalent of 10 years' income in the stock, hopefully due to the stock price rising, and then you may feel that your savings simply don't make much difference anymore. Then you might want to research another stock. So that gives you a few options on how to enter the market. Then what do you do when you are in the market? Well, I'm pretty much full-time researching the company and industry to make sure my investment is secure, and for my trading. More about that in another video. You likely don't need to go into as much depth as me, and if you're not investing and not looking at buying anymore, you probably don't need to keep up to date with what's going on, as the company is solid. But if you are looking at buying more, then you should keep up to date with what's going on. I advise joining some Facebook groups and watching YouTube videos, along with all the official Tesla presentations. Warren Buffett says, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. And that's the trick. You shouldn't think about selling for at least 10 years. This is investing. It's a long-term game. The trick to any great investment is holding long-term. It can be so tempting to sell and take the profit, But how much will you kick yourself if it goes up another 2 or 4 times? It doesn't feel great. I've seen so many people suddenly think they are genius investors because they timed the market right 2 or 3 times and have suddenly cracked some pattern. There's no such thing. And these investors, if you can call them that, end up missing out on the big gains because they sold and can't afford to get back in. Again, that feels awful. So if you hear someone who thinks they have a strategy for trading or timing the market, don't listen to them. They're just gambling. You also hear the famous quote, wait for the dip. This is dangerous too, as sometimes it never dips. If you really want to be invested in Tesla, then invest in Tesla. If it dips, then just buy more if you can. Tesla is known for its volatility. I've held Tesla shares that have gone down nearly half. I was down a significant amount. I tried not to let it not get to me. It was a bad time for Tesla stock. I did everything I could to find as much money to put in. Unfortunately, I couldn't get any. But my point here is it can be tough when it dips, and it keeps dipping. Humans are very narrow-sighted and can't see far into the future. It's just going to be temporary. Tesla is an absolute juggernaut of a stock and has barely gotten started. So be brave and invest when it's down and ignore all the negativity. Try not to be short-sighted, and if it dips, try and gather as much money as you can to invest more. So when dips happen, my biggest mistake I learned was not having money available. For example, I had some cash in a term deposit with the bank locked in for 6 months, giving me 2% annually before tax. I think now how stupid it was to lock in money at 2%. That can prevent me buying in and making what now would have been about 800%. Yes, it hurts a bit, but lesson learned, and now I can share that with you. My stock portfolio is 100% Tesla. Why? Because I can concentrate on learning one company better than 5. That's right, I do not have a diversified stock portfolio. To quote Warren Buffett again, and what he says about diversification, is it is simply a protection against ignorance. So don't be ignorant. Just have one or a few stocks to follow so you actually know everything that's happening in that company. The more you know, the more confident you will feel putting your money in. However, Tesla is also no ordinary stock. If you think it's still just an auto company, you have a lot to learn. It's far more than that. It's about 20 different startups, seeing what they can achieve with the world's best engineers. So I feel it is diversified for me anyway. So what do you want to achieve from your investment? Well, let's take an example. A good cliche might be to pay off your mortgage. Perhaps your mortgage is $500,000 and you want to pay it off in 10 years. Work out what price you expect Tesla to be in 10 years and then count back how much stock you would need to buy to achieve that. Then that's your target investment amount. One other tip is Wall Street doesn't behave like they understand the stock. They act dubious and conservative, almost as if they don't believe a word that comes out of Elon's mouth, like the Cybertruck or robo-taxis. So when we are informed of these amazing new products coming up, rarely does the stock price do anything. In fact, it often goes down. So Elon will literally say something that could be worth $1 trillion to the company, and there is no effect on the price. However, you should get yourself in a position to know better and decide, wow, that's going to be great. I think I might buy some more shares. Unfortunately, at the time of this video, Tesla is about to enter the S&P 500. Watch my video on that to see the impact. But basically, it's all a bit wild right now, and the price might get bloated. I would just advise you to wait for it to settle down, perhaps mid-January. This is the only suggestion I say you should actually follow. The rest are just some ideas for you to contemplate. Well, thanks for listening, everyone, and best of luck with your investing. It's a super fun company to follow, and Elon is very entertaining. It's much more fun to watch with some skin in the game. Please hit the thumbs up, and don't forget to subscribe.